Thank you for joining us today at this webinar organised by the Royal United Services Institute for Defence and Security Studies. My name is Dan Marks. I lead the Energy and Security Programme at the Institute. And I'm very happy to introduce the panel we have today. I think we've got a really interesting conversation to come. So we have Henry Hall from ERM, Helena Matza from TechMet, and Mikhail Maidan from the Oxford Institute for Energy Studies. I'd like to introduce yourself slightly more in depth as you start. But so the reason we're here effectively is to talk about economic statecraft in mineral supply chains. This is an issue that has been gaining prominence over the last few years, but has been developing for some time, especially kind of creeping export controls from China, really kind of escalating from 2023, following on from a long period of kind of economic assault on China, if you could call it that, from the United States, around the CHIPS Act and other efforts to control and constrain supply chains into China and Chinese industry. The use of export controls, economic weaponry, tariffs, trade measures, public investment has been escalating very rapidly over the past year, 18 months in particular. And I think it's an important moment to try to understand what impact is this having on the ground? What impact is this having on supply chains? And how is this changing between, say, the Biden administration, which had one approach and particular emphasis on demand side measures, as well as supply chain control, to President Trump, who has a different approach in some ways, but a similar approach in others. And to understand what is driving policy in China. China is a complex environment for minerals. There are many drivers, many incentives, and many reasons for why different actors do what they do. And then as well to look at what's happening on the ground. What is the impact in producer countries? What's the impact on local communities? What is the impact on ongoing conflicts in mineral areas? So hopefully we have, well, not hopefully, we certainly have a perfect panel for this. So I think, yeah, we'll get going with question for Helena. So the way I want to do it is to start with the United States, then move on to China, then talk more about the broader impact. So Helena, you have a long career in the US government and now in the private sector. So it's a nice intersection to discuss these issues. I think an interesting place to start, especially from a European perspective, is the United States approach to supply chains fundamentally different, and supply chain security from other places? Is that there's not only the way that it goes about it, the way that the government thinks about it and policy communities think about supply chain strategic resources.
Thanks, Dan, and I really appreciate you having me here today. And as you mentioned, I have a slightly, but not totally unique perspective, having served in the US government for almost 14 years, both at the State Department and at the White House, covering all sorts of supply chain issues and ending my career as our investment and infrastructure envoy. I've been able to be part of the US government through the Obama administration, Trump 1, Biden administration, in the beginning of Trump 2, before moving into the private sector and joining TechMet, who is also a USG-backed critical mineral investment firm, which we can talk about later. So, how I look at it, living through the evolution myself, is ultimately where we are now. The concerns around supply chain and supply chain security at this point feels fairly shared among the US and other countries. We might have all gotten there on slightly different timelines, but the reality that we need more resilience in these essential supply chains to be able to support our own economic development, growth in what we were calling next gen tech, but let's be real, it's today's technology capabilities, I think is shared. So I think some of the differences on a fundamental level is how do we address it? And in general, the US has traditionally taken an approach of some combination of incentives and punitive measures. So in the Biden administration, think Inflation Reduction Act, but in Trump too, let's think about the big beautiful bill and the work that it's doing by actually putting real finance over $5 billion worth of, of of capital, right, through different agencies into the sector directly. And then, of course, more on the punitive measures, as you're seeing now in Trump 2, a series of tariffs coming out. And I think even more interestingly, potentially 232 tariffs coming out in the coming months on the critical mineral sector specifically, which is particularly compelling because that sets a tariff schedule of 5 years. So it gives you a real sense of what those implications would be for the market. That is certainly different than many of the approaches we see in Europe, which often are regulatory driven, big frameworks, and they involve different tactics to get there. So if I look at the US over the last 7 years, I think that the psychology around the issue is definitely acceptance and a need to promote that resiliency and bring investment back to the US, but not the US exclusively. And so what we saw during the first Trump administration was a period of time of identification of the issue. What we think is a commonplace conversation today was not really in the top 5 things we talked about in economic statecraft if we go back 7 or 8 years ago. So there was a huge education element that was happening during the Trump administration that got further, electrified, no pun intended, as we were entering into COVID and the Biden administration was coming in during a period of extreme supply chain disruptions, countries trying to come out of COVID, which we did, several times before we were ultimately out. And what the Biden administration did, as you mentioned, Dan, was take more of, a demand side incentive driven approach, both to supporting industry further downstream in the US through IRA and the bipartisan infrastructure law. So trying to bring in more clean energy deployment, EVs, and ultimately creating the demand for those critical minerals upstream. We also did a lot of work that I took care of internationally on how we work with the G7 and G7 plus countries on something called the Partnership for Global Infrastructure and Investment, where we were supporting emerging market infrastructure investment all across the critical mineral ecosystem, but in several other key areas, digital, fiscal infrastructure, you name it. Now we're in Trump 2. In Trump 2, what we're seeing is a version of, for lack of a better term, transactional diplomacy, right? So deal-driven foreign policy where equity is at the helm of the decision making. So now you're seeing the US government taking direct stakes in projects. There are a lot of implications of what that can look like for the industry, and I know we'll talk about some of them later. But I think the evolution we've seen in the US is a good indicator of how we can really start to digest how this market or these markets will start changing in the next several years. So let me just pause there.
Thanks. Yeah, it's a good overview. And I wonder when thinking about the second Trump term, do you think there has been any step change in the kind of I guess the muscularity of diplomacy that you see through the kind of bilateral deals and things like that, but also the kind of slightly less visible emphasis on, say, alignment of export control regimes for other producer countries. So, kind of pressure on African countries to adopt the US export control lists, controlled entities and things like that, or of efforts to improve transparency that you see as well. So, reviewing, revising contracts or licenses for Chinese miners and things like that on a transparency basis, but increasingly quite explicit about what the fundamental driver is. So I guess, has there been any step change there? Is first question. And secondly, what impact have you seen in the industry from these measures? Has there been real impact in terms of new investment and supply going to the US, not going to China? Yeah, has it been successful?
Sure. So I will try to unpack as many of those questions. And Dan, keep me honest if I'm missing one of the points. So one of the most fundamental changes I think I've experienced from the Biden administration to the Trump administration, and I'm probably oversimplifying, and we have to remember we're only 1 year into the Trump administration, so the show is just beginning in this area and many others. But what we really experienced during the Biden administration was a stronger approach towards multilateralism. So, how do we do things with partners? How do we try to incentivize in other markets, right? So the work that we were doing in emerging markets, while it was really great for those countries and bringing in a lot of investment in ancillary sectors like ag and health, they were really a strong focus on creating the physical infrastructure that supported the diversification of critical minerals entering Western markets, right? And that was not something that was done by the US alone. We did that in places like Africa on the Libido corridor, with the Europeans, with the Italians bilaterally. That was a really significant element of the approach of how we looked at the world together with partners, as we were, I think, doing something quite similar to what the Trump administration is doing now, which is really focused on our own industrial policy and industrial based development. So there are some real similarities. What we're seeing with the Trump administration is a bilateral approach first. So, first, we have a tariff regime that has gone out that is essentially resetting the table of the trading relationship with the US and others. And there's lots of different opinions about how effective or not effective that strategy will be. I think we need to continue to watch to see what that looks like. But then to offer relief or additional benefits to a particular country's relationship with the US, you're seeing a series of these bilateral deals start to come through, right? One with Australia just a couple weeks ago. We're seeing how the US is approaching conflict and conflict regions in a different way. In the case of the US Ukraine investment fund, that is now becoming a pretty instrumental piece, and we'll see how this plays out in the coming weeks. But certainly, if we were looking backwards for the last several months of how the US looks at the relationship of supporting Ukraine while ensuring that there is a direct potential benefit for the US as we invest in energy and mineral projects in the coming years, or at least that's the intent. Not so dissimilar with the work with DRC and Rwanda, a peace process that's incredibly important that the Trump administration is certainly accelerating progress on. But on the back end of that, there will be bilateral deals and agreements, right, that we'll see in the coming weeks, I imagine, or coming months, that will focus on our trading relationship, including and probably mostly focused on critical minerals trade. When it comes to the export controls, I think this is more of an evolution of a story personally. Remember, the first export controls that the US had to react to coming from China were on germanium and gallium, I guess now almost a year and a half ago. As the Biden administration really tried to figure out how to deal with that, first and foremost was working with the defense industry to make sure that the US had their sourcing needs met. What we're seeing now, because trade is such a big part of the foreign policy conversation with the Trump administration, is a direct correlation between the conversations between the US and China and whether or not we're meeting, whether or not those issues are going to be addressed, directly correlated with export controls being announced or temporarily suspended. So I think we're seeing a similar trend, but the tactics are different. So we're jumping and coming back and forth. But I don't see an extremely different overall perspective, just a real change in tactics. And then I think to touch your last question, and then I promise I'll be quiet and let some of the other panelists jump in. The way that the Trump administration has really accelerated a lot of the work in the critical mineral space is by being incredibly focused. And so what you saw in the early days of the Trump administration was a handful of executive orders and presidential memorandums that were insisting that the US government and all its relevant agencies work together on identifying and prioritizing critical mineral deals, both really upstream and midstream. That's incredibly important and quite hard to do in a system as big as the US government. And then you see after the big, beautiful bill passed and there was funding allocated to new agencies. So, in addition to the work that we traditionally know the Department of Energy to do, now the Department of Defense or the Department of War has these additional capabilities. You're seeing these pretty strategically identified deals getting announced at a quite fast cadence, almost all of them with equity elements to them, which is not foreign. TechNet was a very early recipient of an equity investment from DFC in 2020, but at this rate and scale, it's certainly accelerated. And we see that effect in markets. We saw that after the announcements on MP and Lithium Americas, rallying in stock prices. We're seeing a different kind of market sentiment to rare earths, but we still have a journey to go on for these prices to start normalizing. And so I think a lot of us in the market are looking at this, cautiously optimistically to see if like this continued investment and support will help push us into a more attractive pricing environment.
Yeah, thanks. The market impact is particularly hard to get your head around sometimes. Mikhail, so I think there's with China, clearly we've seen since 2023 just a gradual expansion of the kind of minerals control list, export controls, kind of changes, and especially in the last year, kind of geopolitical changes and a changing kind of signaling and things like that. How what is fundamental? Well, what are the drivers of Chinese policy, government policy at the top in when it comes to minerals? I mean, is it securing mineral supply chains for their growth industries? Is it geopolitical leverage? Is it defensive, just a way of fending off, US tariff tensions? Is it domestic politics? How do you see the kind of drivers of China's outward facing policy in this area?
Thanks, Dan. It's great to be on this panel. I guess the short answer is all of the above, but then we sort of have to think about it in sequence and in different minerals and metals, right? Because the Chinese mineral policies date back, I mean, some of them already 40 years. Rare earths is something that, the Chinese have big reserves of both light and heavy rare earths. They were developing them in the 80s. Deng Xiaoping famously said in the 90s, the Middle East has oil, we have rare earths. Um, so this has been an industry that has been going for many, many years, and a lot of other critical minerals, be they cobalt, lithium, copper, manganese, are called in China strategic emerging industry minerals. So actually the categorization is different in China. They don't have a critical mineral list. They have strategic emerging industries. So those are what Helena was saying, the industries of today, right? The next gen technologies that are today's technologies. Already 20 years ago, they were identified as key for China's industrial development, and therefore the minerals that go into them were identified as key. And we've already had export quotas, production licenses through the early 2000s, right? The poster child for China's export controls is the 2010 ban on rare earth, well, so-called ban on rare earth exports to Japan. Back then, the idea was to try and regulate a domestic industry that was fragmented, unwieldy, very polluting, a lot of smuggling, and a lot of loss of value, which resonates with some of the other conversations that are going on in China today about overcapacity. But back then, the aim was to try and consolidate the industry to gain more knowledge, more value add from Western technologies. Um, Over time, today, it is a sector where there is not perfect control by the government, but certainly in rare earths, there are now two companies, as compared to sort of tens of companies 10, 15 years ago. And it has become a tool of economic statecraft. And as we've seen in recent months, a very powerful tool of economic statecraft. But that's the rare earth story, right? Where China has a huge amount of leverage and monopoly from the mining all the way to the permanent magnets. A similar story is in sort of the output of some of the processed battery minerals and certainly niche metals, like some of the semiconductor related inputs. If we're talking about gallium and germanium and tungsten and bismuth, where China really has near monopoly, and today it is a leverage point. But on other metals, if you think about lithium, cobalt, nickel, again, copper, manganese, where China is very dominant in the refining, it's not dominant in the upstream. Sort of it still needs to import those minerals and metals. Yes, it has offtake agreements and it has quite a bit of access to the upstream, but it still needs a physical flow of goods into the Chinese market. And that's something that the Chinese are very worried about. Both the kind of access. It's interesting, some of the analysis and the debates in China now are about how China needs to go out more consistently, how it needs to coordinate amongst the different actors. We have this vision of, right, Beijing says go and everybody goes in perfect unity and harmony. Obviously, the reality is slightly more fragmented, and we can talk about that a bit later. But the debate now is, well, how do we make sure that when we go overseas, it's more effective, it is more united? There are, it's feeling to Beijing like a slightly more crowded space, more financing, more countries coming in to kind of de-risk financially investments, to backstop guarantees, to work with companies. This is like the China playbook, and a lot of countries, or not a lot, but the US mainly, and Australia is starting to adopt this. So there are now debates about how does China make sure that ESG doesn't become a tool against it, that the standard setting doesn't undermine China's position in these advanced manufacturing. But there is still that, I think it has shifted from a domestic concern about economic growth, industrial development, how to capture value add, to now a very defensive tool that it can use, sorry, an offensive tool that it can use in economic coercion. But all of those levels still exist, sort of the vulnerabilities, the fragmentation, the cycles of trying to make sure that everybody within China behaves or sort of acts in line with what's best for the national interest. That still exists.
Right. I should have mentioned to the audience that if you have questions, feel free to put them in the chat function. Um, so, follow-on question from me. I mean, you mentioned kind of that coordination has become better in China on this, and well, at least the central government's ability to exert control over the market. Um, can you unpack a little bit some of that? Because obviously the I mean, it's the same in the United States case, I guess, but slightly different. Clearly, obviously, there's a lot of interests, commercial interests. There's local government interests that are not necessarily very interested in restricting exports. Want to sell, want to do well, make profits. So how does that and China has historically had problems controlling elements of its private sector and things. So how complete is that kind of control? One and the second question, how sustainable a weapon do do you think these minerals are fundamentally? It's interesting seeing that when the United States acquired MP materials over the summer, and the rare earths stopped heading to China. I think China lost 8 to 10% of its rare earth supply, and the prices spiked by about 40% in the Chinese price of rare earths. So you, it's US sanctions have always been built on, well, haven't always been built, but the most effective US sanctions have often been built around the dollar. De-dollarization is incredibly hard. The less effective ones have sometimes been based around technologies where there's a constant race to try and keep ahead of your adversary. Um, and you have the space race, the all the kind of Cold War dynamics. Um, so yeah, how it's competing against the United States in that space is difficult. So yeah, how sustainable do you think these kind of policies are, the more they're triggered?
I guess if we start with, the control question, I guess how complete is the control? It's certainly become much more complete, and we're seeing that across a number of sectors. The central government's ability to determine outcomes and to, I guess, mobilize both private and state-led sectors has increased considerably over the past sort of 10, 15, even 20 years. But it's still not perfect, right? There are still um, lots of different incentives and different rationales. if we look at rare earths is the one that has actually been the tightest, I guess, where we've seen consolidation become pretty significant with we now have two big rare earth companies in China and really kind of three main producing regions, but they still compete with each other for the quotas and for production. The kind of rare earth groups are trying to fight each other for market share, for pricing dominance. Sichuan is one of the biggest producers of rare earths in China. Again, it continues to expand mining, even though the government has said that it shouldn't, because they need growth, they need to secure market share, they need to make sure that their kind of local assets, local corporate assets, are the dominant ones. It's slightly different with, I guess, other minerals where China isn't dominant throughout the supply chains. Think of Guangfang Lithium, think of some of the companies that are going overseas. CATL is now diversified and become vertically integrated, but it's a much broader spectrum. And you have certainly there's a difference between the upstream and the downstream sort of users of the critical minerals. Downstream is much harder to control. Upstream, again, where China has control over the mine, it's easier to then try and yield control over the rest of the supply chain. But you have corporate actors, and I know we have this vision of China as this unitary actor where nobody cares about making money. It's all about what the government says. And that's not the reality. Yes, there is a very strong centralized government that lays out a direction of travel and has enabled a lot of these sectors to grow through supportive policies, not just subsidies, but the creation of ecosystems for supply and demand. Within that, there is fierce competition, and these companies will undercut each other both at home and overseas, and that's what often the government tries to regulate, and it sort of moves more or less forcefully to regulate that. But that competition still exists, and again, it's sort of a little bit different between the different sectors. So how much leverage does this offer? I think there was a lot of debate about the October rare earth export or potential export bans, right? Because China's issued a number of different export measures on rare earths. The October ones that have now been shelved for a year were seen as the most extreme, where there was sort of the extraterritoriality element of it, where it was going to be expanded to lots of rare earths. And there was this question of, well, did China bring a gun to a knife fight? Sort of, did it overplay its hand? Because by showing the levels of control and the weaponization, it has created a greater sense of urgency, both in the US and Europe, to diversify these supply chains. It's the question then becomes how realistic is it to diversify supply chains quickly? Again, there is a difference between rare earths, gallium, germanium, where China does control the upstream, the midstream, the downstream, versus lithium, where China doesn't have a similar kind of leverage. But how effectively and how quickly can we diversify? I think probably not very quickly. The sense of urgency that's been injected is good. Um, so the question of did China overplay its hand? I think not, but maybe time will tell. But again, the proof is in the actual diversification, and I think that's very, very hard. So China still controls again, the metals, but not just the metals, right? The skilled workers, the chemical engineers, the technology, and critically, it still has a lot of the downstream markets for the end products. So getting away from China's centrality in all of that is really, really difficult.
Oh, okay, so just one quick last question, possibly quick. Um, to when it comes to the export controls of of recent years, so since kind of 2023, to what extent do you think they are defensive, like driven fundamentally by wanting to develop a lever that it can bring to trade negotiations or any other kind of dispute, versus um, a more strategic wanting to have a tool that it can pull to get its way in the world? I mean, I guess they're kind of two sides of the same coin, but basically what I'm asking is it in response to the US? Or would this have happened anyway? So had there been different policy in the US and, there'd been a slightly more conciliatory type policy, not so much targeting of the economy, looser restrictions, would China have still gone down this route? Or is that the kind of driving dynamic?
I think it would have still gone down this route, maybe used the export control system in different ways, but I think there was and remains, right, a need to, and first of all, control and get a better sense of the domestic system. And that's for a variety of reasons. And that's happening across the board. It's emissions content. It is in line with a lot of China's environmental targets to try and understand what is the emissions profile of a number of industries. But it's also from a tax and control perspective, right? How much money are they making? How much money are they spending? What needs to be subsidized and supported by the government? So, for all of those reasons, China needs to get a better sense of what is happening in those industries. And then it's been mirroring the US kind of policy toolkit, US and Korean and other advanced economies of regulating dual use exports. And that has also been sort of part of the evolution. So it's building up a toolkit very much mirroring what the US has. I think the offensive use of that toolkit has accelerated in response to the US, and the perception in China is that the responses are very much calibrated to US moves. I think even the October export restrictions that are perceived by some in the West as highly escalatory, from the Chinese perspective, right, they came after the Madrid round of US-China talks where they thought they had an understanding about a sort of pause. And then the US extended the entity list with the kind of, with adding a lot of companies to the entity list. The Chinese view is that, well, they were caught off guard by that and so had to respond and had to take it to the next level. So they view it really as tit for tat, we're responding. But in order to be able to protect your industry, I think the view is that you need a grasp on it, you need to control it, you need to understand what's happening, how you use it, and we've seen the way it's used also evolve in the US, right? The export control system was not a trade tool or sort of part of the trade negotiations. Now it has become part of the trade negotiations. So I suspect that we would have had versions of this, but again, it's sort of how you use it that's changed.
Thanks. Um, so Henry, you see quite a lot of deals and quite a lot of things on the ground around the world. Have you seen kind of these maneuverings, these different policies kind of result in material changes in kind of the engagement between the US and China and producer governments, or as actually things more or less the same as they have been? And also, to what extent are we seeing changes on the ground around mines, interaction with conflicts, those kind of issues?
Thanks, Dan. Yes, and as you say, I've worked for about sort of 15 years now, focusing very much on political and license to operate issues, and primarily in the mining sector, and around sort of 60 countries, but mainly sort of Africa and Latin America particularly. And over that time, we've definitely seen quite a strong transition in terms of the sorts of support you could expect from government. The consultancy I'm a partner with, ERM, is essentially a sustainability consultancy, or the largest specialist sustainability consultancy, but we do a lot of work helping clients to get projects up and running. We undertook a major study recently into 226 critical mineral projects around the world, and understanding what sorts of progress they'd made. And an interesting finding there was that 64% of those projects globally experienced some sort of delay, and a significant proportion of those delays came about through some sort of permitting issue driven by environmental or social questions on the ground. Generally, I'd say it's important to recognize that the sorts of issues we're discussing here in terms of these resource security challenges are relatively marginal when compared against the geological realities or those crucial license to operate issues on whether a project can genuinely get off the ground. But there are certainly a group of very important cases where significant backing from the US government can really have a material impact in progressing a project. Over the last few years, we've always seen it, particularly for those companies that had a significant US base or set of stakeholders to seek to access support of their host governments, but often would find that the willingness of the government, the US government or European governments, to really expend political capital for what would be seen as relatively marginal commercial interests in those countries would be quite limited. There'd be a willingness to talk a big game, but when it came down to the crunch, would they be really willing to put too much skin in the game? And over the last couple of years, particularly in the influence of the US, we have seen a genuine shift in the willingness and ability to bring about change. And it's interesting, coming back to Helena's point around a more transactional politics, that while that's often seen as a negative development in some forms, and certainly in some forms it is, the willingness that brings about and the commitment that brings about for the government to actually follow through on its commitments is a genuinely positive development, and one I think that is actually often welcomed by African governments that appreciate the transparency and clarity that comes with knowing what the agenda is, and knowing whether or not a counterparty is realistically going to follow through based on the benefits on offer. A few sort of cases where we've seen that of particular significance: Cobalt's deal to acquire a portion of ABZ's previously owned lithium asset in the DRC was certainly heavily influenced by the US government and willing to really push that deal. It was interesting, again, in the DRC to see the sale process for Chemaf, a copper and cobalt mine, run into the mud, where there was a potential deal to be done with a Chinese operator, Norinco, but the government pulled the plug on, again, certainly thought to be influenced by US interests. And indeed, the recent acquisition of a company called Base Resources in Madagascar, which had a mineral sands mine, which also had a monazite interest and a crucial critical metal, had been locked in arbitration with the government for a number of years, but the acquisition by Energy Fuels, a US domiciled company, was significant in rapidly clearing up that process, gaining government support to get the project up and running. So these are the sorts of dynamics that you might expect, but certainly haven't really been witnessed in many cases in the previous 10 years, but we've seen a sort of flurry of examples in more recent times. In terms of those local impacts, I'd say it's been more indirect. As I say, that license to operate topic remains very important. There's certainly a kind of strong xenophobia narrative that exists in a few countries in Africa, less so in others. And so to some degree, there can be a degree to which communities get drawn into a sense of colonial politics, or a sense of Chinese standards not being as strong. But in general, the dynamic of critical minerals politics tends to be one of either acceleration or delay of projects. So, for example, the fact that Chemaf deal wasn't done with Norinco has actually led to that project being put into care and maintenance. So there's 4,000 jobs locally which are being held up as a result of that political dynamic. So certainly a local impact there. And in other cases, the example I mentioned of Energy Fuels in Madagascar, that's allowing a project to develop and significant employment to come about. But the extent to which that's been weaponized as a local political issue, we haven't necessarily seen come through. It's part of a broader set of dynamics, I'd say there.
Yeah. I mean, Mikhail mentioned earlier, and you kind of alluded to it there, the kind of weaponization of standards, or at least the thinking, which you do hear a lot, especially actually I find from politicians, about how you could increase, like by enforcing higher standards, you can force diversity on the supply chain, i.e. effectively force some Chinese actors either out of the market or create a kind of premium. I think there's quite a lot of dispute about that. Certainly we've heard previously that actually many Chinese companies are actually very well placed to meet new certifications and standards. So I guess in terms of the kind of narrative of standards if you're taking the kind of more vanilla versions, using standards to level the playing field, is that a helpful way of thinking about standards? I mean, is this a potential area for weaponization, or is it kind of just a distraction from the core task that really everyone needs standards to fulfill, which is to facilitate sustainable investment into mining to meet demand?
Mm. Yeah, that's a really interesting point. I think there's two main issues to unpack there. One is the standard is only useful if there is an enforcement mechanism that rewards a company for implementing the standard. And then the second point is the one you'd mentioned around, is it legitimately an area of competitive advantage, or will Chinese companies be able to quite quickly catch up in some of those areas? So on the first point, clearly a lot of Western mining companies at the moment are feeling they've gone too far on standards, and that they have placed a millstone around their neck in having very costly standards to implement, which aren't necessarily appreciated by the market. So unless they're gaining access to cheaper sources of finance, unless customers are willing to pay some sort of price premium, unless it protects them from some sort of reputational impact, or crucially, unless they're a supplier of choice through adopting more stringent standards, then there is very little advantage to actually tying yourself to sort of implementing those more stringent approaches. Having said that, I think the one area of particular hope there is around the supplier of choice topic. And I think a very interesting case study there is around the Simandou mine in Guinea, which has entered production in the last couple of years, the largest mining project in the world and one of the largest mines in the world once it's in full production. It's a joint venture between Rio Tinto, its partial SOE owner Chinalco, as well as the SMB Winning Corporation, a combination of Chinese and other Asian parties. But ultimately, the sort of magic of this partnership is the leveraging of Chinese capabilities in delivering complex infrastructure quickly and on time, with a Western approach to managing biodiversity, health and safety, and social topics. And it's certainly been reported that the reason why the Ghanaian government was so keen to have Rio on board in that process as it developed was to ensure that the standards would remain strong. The other interesting thing to note there is how interested those Chinese partners have been to learn from Rio Tinto in a lot of those areas. Not necessarily adopt everything wholesale, but certainly to understand what makes sense within their model and what might not. And I think as soon as a Chinese SOE or counterparty operating internationally sees the value driver from meeting a higher sustainability or ESG standard, they're able to be quite nimble in meeting some of those approaches. So an interesting example there is around the carbon border adjustment mechanism in Europe, as ostensibly created so as to not disadvantage European steelmakers meeting carbon commitments around decarbonisation. And I understand from conversations with some of those companies in the iron ore and steel making space that a lot of the companies that was targeted at in China have already met the commitments around decarbonisation to such a degree that the legislation will effectively be dead in the water. And particularly around some of those technical topics, I've heard a lot of feedback lately from major mining companies that they're not at all confident that those environmental advantages that they may have historically held over Chinese operators will be resilient over the next sort of 5 or so years. Where there may be a little bit more of a long-term advantage would be in that social or political space, or particularly in the social space, where it's less of a technical discipline to implement and more of a experiential human capital product that you really require the people who have managed it over time to understand how to manage it better. So again, coming back to that supplier of choice license to operate topic, perhaps that's where there's still a comparative advantage for Western players implementing high standards.
So to bring it a little bit full circle or background again, I wonder if you and Helena could talk a little bit about how the kind of China-US dynamics are interacting or could interact with local regional conflicts. I think we're quite early in this process, and as yet it hasn't become fierce enough to really um, stoke conflicts actively, I suppose. But I mean, there is kind of an example, I think, in the DRC where you have all these interests coming to bear, kind of non-state armed groups with control of very important mineral deposits. You have the United States strong arming or partnering with the government. You have Chinese interests very much involved. Um, how do you see these interacting? I mean, is it a dampener on conflict? You know, the US has come in and said we want to try and make peace here, and we want to make this work, or is there potential for it to fuel conflict? How do you see that kind of dynamic?
Over to you first, Helena.
All right, Henry, I'll give you a little bit of break. Look, this is an incredibly complicated question, right? If we look back, historically, as someone who's been doing international economic policy for most of my career, you have to take some parallels and lessons learned from the broader energy story and how the US and the West interacted with OPEC in the 1970s and the concerns around really getting to a place where the United States did, which is in a true energy dominance position. I know that sometimes sounds like rhetoric, but the capabilities from not having access to really important resources, being reliant on a version of a cartel, and then ultimately investing very deeply into our own capabilities and ultimately spurring the shale gas revolution, which started from a lot of expenditure and support and R&D, has some real parallels to the global story here. The reality is, for lack of a better term, we have different haves and have-nots and different opportunities for countries in different parts of the global south, emerging markets, play a really different role in this version of an energy story, whether that's Indonesia, DRC, or parts of South America that might have not been as pertinent to like the US, Middle East narrative in the past. So could it spur a conflict? Sure, but I hope we have learned lessons from the past and it does not. And we go into this regime or this period of time from an opportunity-based perspective. And I agree with Henry. Transactional diplomacy isn't inherently bad. Clarity and understanding of what your partners or people you are partnering with want and need does lead to a potential outcome of finding more of those win-win solutions. So, what you raise in the DRC is a really interesting example. The US interest in the DRC and that relationship has been evolving over a period of time. Apologies, I had a rogue kid run into the room in between bath time, so I'm glad she didn't make it into the frame. But in the Biden administration, there was a huge focus on how to work with that part of the world, right? When we launched what I shared with you earlier, the Partnership for Global Infrastructure and Investment, one of the first focuses and main flagship initiatives was focused on the Libido Corridor and how the US and our partners could bring additional investment to that part of the world. And we mobilized in Angola, DRC, and Zambia over $6 billion of investment in just a few, sorry, let me unblur my background, in a few months, in 18 months, right? And so that was a very investment-driven approach. Of course, it was focused on spurring economic development and connectivity to Western markets, but it had a direct focus on helping support Western companies entering into the DRC and participating in the opportunities in the copper cobalt belt. It was looked at as a real serious national security imperative. At the time, 12 out of the 15 copper cobalt mines were all owned by the Chinese. The other 3 had issues connected to sanctions that made it hard for US entities to interact with. And that was a real challenge. You fast forward into what the success of the Libido Corridor brought and a really intense focus from the Trump administration And you see another opportunity. While conversations around the peace process in DRC and Rwanda certainly began and had ebbs and flows over the course of many years, this is a conflict that is way longer than the period of time that we're talking about now. I think the opportunity for potential economic success, hopefully cross-border in both DRC and Rwanda, and accessibility to those markets and seeing what the libido corridor could do, help support some of the process that we're seeing on the ground now. And the Trump administration is running with it. They've put a lot of attention, a lot of high-level support in supporting this peace process continuing to evolve. And their success is ultimately, we hope, if there is success, and it looks likely that there's certainly been progress, although it will never be perfect, it will never be stagnant, it will continue to evolve, might open up opportunities for more participation of Western mining companies in the East, which is frankly good for everybody in the region, as well as Western aligned supply chains, whether that's in tin, tantalum, or you name it. So I can't help it. I'm a trained career diplomat. I will always see policy as, connectivity and building on top of each other, even if we go in slightly different directions. But in the case of the DRC in particular, I think it's a really unique example of continuity with like what we talked about earlier, slight change of tactics and focus, but we may be ultimately leading towards a similar outcome. But I'd be really curious to see what Henry has to add to that. I might be being too optimistic.
No, thanks, Lane. I thought that's an excellent response on DRC. I suppose a couple of other case studies that could be interesting to throw in there where we might see dynamics on both sides going forward. Both where there may well be very significant copper resources that aren't well explored or developed yet. But one is in the Balochistan region of Pakistan and also flowing into Afghanistan. There's a project there, the Reko Diq project, that's been stalled for a very long time due to uncertainty with the Pakistan government, that is now developing and should enter production in the next few years, but is part of a belt of copper projects, which could be hugely significant in their value, and is certainly seeing competition from both China and US interest to seek to develop and form a part of the coalition that brings them to market. The extent to which those regions can really benefit from the interest of the US government in regions otherwise very insecure and challenging could really be significant in bringing in the investment that's required to unpack some of those challenges and create a much more positive, more peaceful outcome than would be the case otherwise. On the flip side, another example of a very resource well-endowed country, Venezuela, currently you're obviously seeing a very aggressive US policy towards the country, driven much more by oil than copper, reportedly. But certainly you could see stories unraveling over the next few years where you have a government in power sitting on resources that are aligned with the wrong side as the government sees it, and that may seek to go back to sort of 1970s style politics and destabilizing governments in order to benefit from those resources with a new government coming into place. As Helena says, hopefully we're past some of those politics, or at least in their worst successes. But certainly those two examples perhaps give some ideas as to how we could see this politics leading to or preventing conflict in future.
Mikhail, you want us to come in quickly, and then we've be good to get through. We've got 3 questions we can try and whip through.
Yes, please. Just quickly, I guess just on the parallels to energy, right? We've seen a lot of talk and a lot of debate about the geopolitics of energy and conflicts associated with access to energy. We've also learned a number of things. And I think Helena sort of alluded to this, but there's the supply side matters, right? What we do, what countries do domestically, the demand side, what countries do domestically, either on developing their own resources, but certainly on managing demand, on recycling, on efficiencies matter quite a bit. We've also seen in crises that the availability of supplies, traded markets, pricing, so transparent pricing mechanisms that help deal with shortages and alleviate some of the impact of crises is really, really significant. And those are things that are very nascent in these minerals markets, but really need to be developed and expanded on. Again, in energy, we've also seen that there are very few countries that want binary solutions, that want the US or China. Obviously, we're in a geopolitical environment that's much more bifurcated and polarized. But we've seen throughout histories countries taking Chinese money for investments in infrastructure and then using that infrastructure to support other or to attract other sorts of investments. So, there is a broad array of responses here and ways that we can deal with the conflict question that are also just significant for the broader diversification trends. Just one thing that is, I think, important to remember here, we are talking about US-China competition and this kind of binary race. Let's not forget that some of these minerals and metals are really critical and needed for the energy transition. And there, it's not about who wins the race to dominate the technologies, it's how much more can we have, how can we expand these markets quickly enough in order to support decarbonization. But and if you allow me a minute plug, this is actually one of these questions of market creation, of stockpiling, of market trading is something that RUSI and OIES are looking to do a lot more work on together. So A, follow this space, but B, if you're interested in supporting our work, then please do get in touch.
Yeah, I'm happy to allow allow that particular plug. So we had three questions. I don't know how quickly we can go through them. We'll try not to go too over time. One for you, Helena, I think basically on the reauthorization of the DFC. I don't know if you've seen this question, but whether you expect a shift from a development mandate, and especially, I guess, also a change in the risk tolerance. So I don't know if you want to quickly give any thoughts you have on that.
Sure. We're all looking at DFC reauthorization very closely here, especially from the TechMet perspective, where they're one of our largest and our largest sovereign funder. That partnership is absolutely instrumental to us. I think we're already seeing a heightening of focus on national security and strategy leading all foreign policy objectives. While DFC is probably, if not our strongest, definitely one of our strongest tools in being able to ultimately implement behind our diplomacy. So I do think we'll see a continual heightening of national security. I don't think we'll see the development focus totally disappear. The idea for the DFC as, the U.S. premier's development finance institution is to be able to help and fit in and support companies in complicated markets where there is additionally that national security or development nexus. So let's continue to watch, but I think everything we're seeing is showing a similar evolution to what we're seeing with the foreign policy, but still a strong focus on the core elements that made up the Build Act to begin with. I think there are a lot of questions in DC around, what will the expansion of potential capabilities be for the DFC, including some opportunities to potentially work in higher or middle income countries to the extent that there is a national security imperative. I think that that's probably one of the last items that is currently being debated, along with how the equity fix will work for DFC. So we hope that that's getting sorted out now that Congress is back. And moving and the US government's reopened. And I know there's a ton of strong support on the Hill for a flexible, fully capitalized DFC to be operating as soon as possible.
Thank you. So we probably don't have time for both last questions. I think the economic weapons from the West and NATO is an interesting question, possibly better answered in a different session, as I imagine this would be largely outside of minerals. Perhaps a good place to end might be with Henry on the last question of effectively, in what can European countries do to ensure that mining communities don't face the same kind of impacts that we've had in other sectors? And if you could keep it as brief as possible, as I imagine you have lots to say on that, but very brief response. Yeah, you're muted, sorry.
Thanks. I'll give a very quick glib response rather than going through all the details. I think one vehicle that's hugely helpful that has impact is investment through the EBRD. essentially the major challenge for mining companies is how to access finance for developing new projects. And that's something that Europe can really engage to try to unlock. And if you receive finance through EBRD, you're required to meet a whole lot of stringent requirements around how you invest that do have very, very strong protections around community investment and engagement. So certainly encouraging some of the ICMM, International Council on Mining and Metals member companies to do the investment rather than some of the more sort of cowboy companies that might exist, and through the medium of providing that access and investment is probably the most impactful avenue I can immediately think of.
Right. So effectively, more European investment into mining would help. Great. Well, there's a lot of other topics, areas we could have explored, lots of things that would have been great, but I think that was really, really interesting. And thank you very much for three guests for a really interesting conversation, and for everybody else for joining us.